Say what you want about me, guys. It's you that asked for small cap. It's you that asked for high risk. It's you that's asked for a degen play. So it's the first time we've covered this on the channel. This is Landx Governance Token. Let's start with an introduction rather than the charts because we can all learn something from this. This is new. We need to understand what it is. With it being high risk, we need to treat it as high risk. So Landx, an introduction. Let's go through this together. How Landx is bringing uncorrelated inflation hedged exposure and sustainable value producing yield to the blockchain realms. While the global economy has been struggling, there's one asset that's been consistently rising in the US since the 1970s and before, which is farmland. Feeding billions of families around the globe, farmland yield is trustworthy, sustainable, and consistent. So with crypto, investors can place their capital in everything from $1 million monkey JPEGs to more trustworthy blockchain projects like Ethereum, but not farmland. So this is something that's unique. This is something that's new, and this is something that's innovative. 5% of global derivatives volume in traditional finance is made up of agricultural financing, yet there is no way to invest in crypto in the world's oldest, most consistent asset. You've got there a list of the different sectors there. That is why our team at Landx is linking farmland yield to the blockchain through our proprietary perpetual commodity vault protocol. Through Landx, investors can hedge against inflation and have direct exposure to farmland commodities, including wheat, corn, soybeans, and rice. So finally, how does Landx work? It provides capital to real-world farmers in exchange for a legal share of their crop in perpetuity. Crop shares is then represented by an ERC20 tokenized perpetual vault, which is an X token, and investors can purchase crop-specific X tokens and receive daily yields in USDC. So it is innovative. It's bringing farmland and agriculture to the blockchain. So let's take a look at the chart. Okay, first thing, take a step back, look at the chart. What was the first thing that you notice? We've had two big spikes to the upside and two pullbacks. Since launch, this first spike to the upside, that was 598%, call it 600%. The second spike to the upside from its low to its high, 496%. So these are not to be sniffed at, but how can you play this? So we've got a bottom here. Let's stick in the bottom. How many touches have we had at the bottom? We've had 1, 2, 3, 4, 5, 6 touches. So that's a confirmed bottom. That is sitting at 0.6671. We'll build in another zone, which was previous resistance here. You can see it's reacted once, twice, 3 times, 4 times, 5 times of resistance. Is it acting as support now? You can see it is acting as support. What was previous resistance? We want to flip support. We want a reaction at support, and we've had a reaction at support with this buy-up candle. So next thing, Fibonacci. What Fibonacci levels are sticking? That's all the way from the swing low, the bear market low, to its swing high, and see if we've got any confluence with any levels. What levels do we need to regain? First and foremost, you've got your 786. So not only do we have a previous resistance flip support, an RS flip reaction, you've also had a reaction at the 786 Fibonacci level. Remember, the 786 is not as strong as the 618. We need to regain the 618 in the short term for upward momentum. The next thing that we can do is simple trend line. We're just sick of simple trend line. How many touches has it had? The more touches, the better it is. So the trend line is going to go from here down to here. How many touches have we had here? 1, 2, 3, trying to break out now. So you can wait for the trend break. You can wait for the close above the trend. And once you've got a close above the trend, what do? Protect yourself under the low and then ride it, trail your stops all the way up until the trend reverses. That's how you can play this, because if you were holding all the way up here, what was that? That was 500%, and this was 600%, and rode it all the way back down. That would have been a loss from there of 61%. This would have been a loss of 71%. So it's important to use trailing stop losses, or it's important to ladder your position out of these high risk gems. Because if you're trailing your stop here, for example, we break, start creating those higher highs, we start creating those higher lows, higher highs, higher lows. What is a trailing stop loss and how does it protect you? Trailing stop loss is just moving your stops up along with the trend. moving your stops up along with the trend. Every time you put in a new low and then create a higher high, you don't expect that higher low to be broken. If it's broken, the trend's reversed. If the trend's reversed, you want to be out of your position to accumulate at lower prices. So by putting a trailing stop loss and following it up, when the trend ultimately reverses back to the downside, you're stopped out and you can take entries at lower levels. So build it into your system, guys. Let me know in the comments below if you don't understand what a trailing stop loss is. Let me know in the comments below if you'd like me to teach you anything else. And let me know, more importantly, what your crypto calls are, because I'll be happy to go through them. So take care of yourself. I'll see you in the next one.